UniCredit CEO will reward investors with €2 billion of share buybacks in a new 4-year strategic plan. The bank will also cut about 8,000 jobs as it grapples with slow economic growth and negative interest rates. Joining us now to discuss, Elisa Martinuzzi, finance columnist for Bloomberg Opinion. Elisa, good morning to you. How different will UniCredit's plan be then? How different is this out to 2023 from what we saw previously?
Clearly, it's evolution rather than revolution. What you'll see is, a business that will have, a slightly, a rather similar perimeter. Having said that, they're obviously laying off 8,000 people across Western Europe, mostly. Cutting about 17% of branches in Western Europe. But what they are doing, of course, is building on the plan through 2019, which has been characterized by simplification and de-risking of the model. And what that does is it allows the company to give back more to shareholders with buybacks, as you say, in dividends that will make up about, that will take roughly about 40% of profit going back to shareholders over the period.
So if this is something that's supposed to simplify the model, simplify the business, and we're hearing a lot of return of cash to shareholders so that the cash no longer sitting on the balance sheets of UniCredit itself, does that mean that they're not interested in playing a role in consolidation and M&A within the European space?
For now, the management is pretty categorical that M&A would only consist of small bolt-on acquisitions with share prices where they are. It's not convenient to embark on, large M&A, and he reiterated that today in comments to the press. But, having said that, clearly there's a lot moving on the regulatory front in Europe that may change the landscape. As we know, there's a renewed push for, the completion of banking union, which, of course, might make deals, in particular cross-border deals, more likely.